Good morning and welcome to How to Make a Crore with Atulya Agrawal. Today I am here with Ramesh Damani, the multi-bagger man. Ramesh Damani was born into a finance family, for his father was already into the stock markets. Ramesh Damani's interesting story began ever since he went to California for his MBA. He never wanted to get involved with the stock markets. His father, on the other hand, wished the opposite. So one fine day, his father sent 10,000 USD to him and said, if you double this money, then it becomes yours. However, if you lose it, no questions asked. As luck would have had it, he lost the money in quick order. That loss, however, forced him to study what makes great stocks. Ramesh Damani became a member of the Bombay Stock Exchange in 1989. After which, in 1993, he invested 10 lakhs in both Infosys and CMC. By 1999, these investments had grown many-fold. After years of experience and making his own rules, Ramesh Damani is the proud owner of Ramesh S. Damani Finance Private Limited. Good morning, Ramesh uncle. It is a pleasure to have you on How to Make a Crore with Atulya Agrawal. So without further ado, let us begin with the first question. So what brought you to the investment field?
Well, it's a very interesting question. As you mentioned in your introduction, I'd educated abroad in California in the United States. Then I started working there as a software programmer, designing banking systems and the like. I'm sure you read Steve Jobs, or your fellow class read Steve Jobs' place of connecting the dots. So what happened was that in my youth, my father was very interested. I come back to the stock market because he kind of figured that there was a big boom coming in India. And I was very happy in living the California life. So he sent me $10,000 and he said, Ramesh, invest that in the stock market. And if you make money, it's yours to keep. If you lose money, no questions asked. That seemed like a very fair offer to me. So I took the money and I promptly lost it at the beginning of a great bull market. So that prompted me to do a lot of soul searching and as to why I had lost the money. And my father was a wise old man. He understood that that would pique my interest in stock markets, whether I made money or lost money, because money is what motivates a young man at that time. And he was absolutely right. So that, of course, led me to come to Bombay and start my own brokerage.
So you've been in this field for 30 years now, and you're a really successful investor. How did you sustain these 30 years in such a stressful field?
You know, let me do two things. Yeah, it's stressful in terms the volatility is very sharp day to day. And if you realize in the last 30 years, almost every imaginable crisis has taken place in India. We've had Kargil, we've had government stopper, we've had demonetization, you've had the NBFC crisis, you had the global financial crisis. Almost everything has happened in this field out there. But what people don't understand is when I joined the market in 1989, the Sensex was around 600. Today it's closer to 36,000. That's almost a 60x move in the index itself. Individual stocks have gone up 100x, 200x during the same period. So underlying all this volatility and all this craziness that we see in the market, great businesses are rewarded very handsomely over time. And it's your job to find those great businesses. So that keeps me occupied.
So for other young minds like me who want to follow into the investment career, what is your broad advice?
My advice is twofold. The first thing is look and find great businesses to invest in, because the market will give you a plethora of choices. Just like if you're playing a game of cricket, for example, someone will bowl a fast ball, someone will bowl a spinning, someone will bowl a googly ball. But the ball you want to hit is a bit low pitched, coming outside to you, full onto the bat, and you can hit it for a 4 or 6, right? So you wait for that sweet pitch that's coming to you. Don't try hit the googlies or the ball fast outside the off stump, because invariably you'll give a catch or get out. So first look for the great business, look for the great businessmen out there. And then remember, the key to making money in the wealth is to compound your money. That is, you should move your investment should go up 22-23% a year. Broadly should double every 3 years. If you double your money every 3 years, you're probably going to end up with a huge payoff at the end of your investment career, which maybe say 30 years like mine was.
So how can we begin? Like, are there any particular courses or subjects in our education that we can take to become a good investor in the future?
You know, this business is not very high on IQ. You don't require a 200 IQ, or you don't need to be a rocket scientist to do that. You have to have the right temperament for this. What is the right temperament? You need to think for yourself, right? You need to understand valuations. How do you value something? And you need to be, Buffett said very correctly, he says, be fearful when others are greedy, and you be greedy when others are fearful. What he was trying to say is that you try and find value among all this noise that goes on to the market. Remember, Buffett became one of the richest guys in the world, and he's not even in Wall Street or the Lal Street. He sits in Omaha, Nebraska. So you don't really have to be at the center of action to think independently. So the very important thing is to kind of think independently and place your bets accordingly. There are great business opportunities in India today. They're greater than the last 30 years that I was in the market, because the society is changing. It's digitizing so much. It's going to electric vehicles, for example. So much biotechnology is happening. So the great opportunities for entrepreneurs. It's your job to find those great businesses of tomorrow.
You are one of the most successful investors of India. What is the secret behind your success?
Well, thank you. That's very kind. There are lots of other investors who have done extremely well out there. But I'm fortunate to have been able to pick stocks. The first thing I mentioned to you in the introduction is connect the dots. All right. So Steve Jobs, invented this beautiful typography and fonts in the Apple computer because he took a calligraphy course when he was in college. So I told you that I was a computer programmer in the 1980s in California. When I came back to India, I couldn't understand what was hot in the market, cement or steel, but I understood computer software. And luckily for me at that time, two companies went public. One was Infosys and one was CMC. So I was one of the first analysts to get into those stocks. And as the market recognized the value of those businesses, the return on capital that these businesses provide, these stocks went up 50, 100, even sometimes 500-fold. So that was my first big lucky break actually.
So broadly speaking, what has been your investment style?
My investment style is to develop a circle of competency. There are 5,000 stocks that trade in any given day in the stock exchange. You don't have to buy all those 5,000 stocks to make money. You want a field which you understand. For example, say you are a doctor. You can understand pharmaceutical companies far better than the analysts on the Lal Street. Or say you're an engineer or you're a banker. Try and restrict your selection to an area that you understand, rather than try and find all 5,000 stocks or what is hot at the current time or what is the most fashionable at the current time. So you try and find those businesses and ask yourself a simple question. Can a business double every 3 years? Because here's the trick to making money in the market. Say you have a 30-year career in the stock market and you're starting with 1 lakh and you want to become a crore, right? That's the goal over 30 years. If you try to do it over 6 months, you'll probably end in failure. But if you try to do a career of 30 years, you probably will end up successful. Because if you take 1 lakh and you have a 30-year career and you double your money every 3 years, that means you'll have 10 doubles in your professional career. Your money will double 10 times. One will become 2 lakhs, 2 lakhs will become 4 lakhs, and go on. At the end of 30 years, that will become about a crore. So that's how you become a crorepati in this market, starting with just 1 lakh, if you spend enough time in the market.
Okay, and what are your parameters that you look at?
A good business run by good people with a good opportunity, but cheap. See, the trick in this business is to find things that are cheap. आप shopping करने जाते हैं, when you go shopping, अपने को रुपए की चीज़ अट्ठने में खरीदनी है. You want to buy things cheap, right?
Yeah.
Shirts are bargains, you want to buy it. iPhone is a bargain, you want to buy it, right? Because it's cheap.
Yeah.
Same thing in the stock market. Unfortunately, people buy it when it's going up, not when it's going down. If you've done your homework, you should be able to buy stocks when they're going down, because they're cheaper than what you normally would expect. And like I said in playing cricket, that the trick is to wait for the ball that you can hit for a 4 or 6. You don't have to swing at every ball as in a cricket game. In T20, if you don't hit, you get out, people will boo you, right? But in the game of investments, you can just wait till you find one day the market crashes and stocks are so cheap and people are not looking. And that's when, instead of becoming fearful, you become greedy and buy a lot of stocks. That's the key.
So do you take quality of management into importance?
Of course that's important. It's very important. You want people with integrity, with passion, with dedication to the business. How do you judge whether management is integrity? I think you just observe people. I think that helps. I think if they are very modest, they live modestly, they speak carefully, they speak nuance instead of making broad, brash statements. I think that you get a sense, once you meet more and more managements, you get a sense of who's, under promising and over delivering or doing the opposite.
Okay, so typically what is your time horizon per stock of yours?
There is no time horizon. People like to think that long-term investing is equated to investing for 10 years or 15 years. But like a friend of mine told me that Rome wasn't built in a day, but Hiroshima was destroyed in a day, right? So a great business doesn't mature in a day. It takes time to mature. And as long as the business is good, as long as it's delivering returns, I want to keep the stock. So the idea that because the stock has doubled, you sell it, or stock has gone up 3x, you sell it, is not a very good idea, because businesses like Infosys, we told you, went up not 1x, 2x, 5x, 10x, but 500x over a period of 10 years or so. So the idea is you want to buy a business and hold it as long as the business is productive and doing well.
And do you have any other advice or guidance?
You know, it's a great place. I think everyone must follow their passion in life. I think that's very important. If you want to be a lawyer, I think do legal. You want to be a writer, go live whatever you want to do. But if you're interested in finance and you're interested in being rich, stock market is a great place to express yourself, because even someone with very modest means, a very small amount of capital, invest wisely, can end up extraordinarily rich thanks to the function of the stock market. So I would say that people who want to pursue financial freedom and people who want to be their own bosses, that's a great place to start.
So thank you for being with us.